Hey, Michelle Masacchio with Fit Money CPA, where we propel veterinarians to their wildest dream practices through hindsight, insight, and foresight. So today we wanted to talk about, I can't believe it, year-end tax planning and preparation. Um, it's amazing that we're already in November. We all know how time flies, and we got to get ready for our tax season. So one of the first things that you want to do is make sure that your documents are organized. I'm just going to pull my cheat sheets over here. Um, you want to make sure that everything's been recorded for your income and your expenses. Now, when you're working with us, we would be doing that for you. And all you have to do is ask for the reports so that you can see them. You want to make sure all the bank accounts are reconciled, all your credit cards are reconciled. Make sure that your loans, your outstanding loans are reconciled, because that interest that you're paying is deductible, even though the principal amount is not. So, we want to make sure that we're recording all of our streams of revenue. And that's something that we'll talk to you about as you begin working with us, that we use the AHA chart of accounts, and we make it as specific and detailed as you need. We can do just income, or we can do income from surgeries, dental, health checkups, wellness checkups, boarding, anything like that. We can track that income for you. Some other things to think about are inventories. So we will need a year-end number on your inventory. So somebody's going to have to count it either right at December 31st or very soon afterwards. And, the reason that we need the inventory is that it affects your balance sheet as well as your profit and loss. So we're trying to make sure that we're getting all the deductions that we possibly can for you. Speaking of deductions, we want to maximize those. Have you purchased equipment? We've still got time for you to purchase equipment if you need it. I don't think the tax tail should always wag the dog. If you don't need the equipment, don't buy it. Because, again, you're using your cash, and you may want to hang on to that. So unless you need that piece of equipment, ultrasound, whatever, x-ray, I would not suggest just going out to buy it. So just keep that in mind. Have you tracked all of your mileage, all your travel? What about continuing ed? Have you captured that? Sometimes that's forgotten as an expense. You're thinking, oh my gosh, I'll just pay it out of pocket, pay it out of my own pocket, personal pocket. But if you do that, you need to have the business reimburse you, because again, that is a deductible expense, and we just want to make sure you're getting it. What about marketing and advertising? Again, we want to make sure that we're picking up all of the information that we can to get you into a better tax position. So, obviously every twice a month, or sometimes 3 times a month, you make a payroll. And we want to make sure that all of those reports have been filed. Now, if you're utilizing a payroll company, they're going to take care of all of that on your behalf. So no need to worry there. It's just if you are doing it yourself, which I do not recommend, or you are working with a bookkeeper or CPA that is preparing your payroll, I would double check with them to make sure everything's been filed. We recommend using a payroll company because that's their area of expertise. And with the constant changes in payroll, there's no way that we feel like we can keep up with that. So we use the experts, and I strongly suggest that you do as well. Have you talked to your CPA about tax planning? Have they even offered you any tax plans? So you might want to bring it up. And if they look dumbfounded when you ask them that question, give us a call. we can certainly help you with some tax planning ideas. We still have a little bit of time in this year, and we can definitely move forward to 2025 and beyond. So just keep that in mind. Again, make sure all of your licenses are in compliance. Here's one that goes unnoticed most of the time. Check your fixed asset listing, which that's just a list of all of your assets that you have and the depreciation with it. You may have items on there that are obsolete or you got rid of them years ago. Well, there are states, and I happen to be in one, which is Kentucky, that taxes you on your fixed assets. So if you have items on that list that again are obsolete or you really don't even have them, you're being taxed on them. We want to get rid of those, take those off there, so you're not paying tax, unnecessary property tax on that. Obviously, we want to get an idea of what your tax liability might be, because we've already got you planning throughout the year. We're making quarterly estimates. We're doing this, we're doing that. But that last quarter, we just want to make sure we're spot on. And then, think about the succession planning and maybe how you want to grow. You may want to take your practice to the next level. You may want to add another location. Whatever that is, we can certainly help you with that. So if you have any questions whatsoever about what you need to do before year end for your taxes, hop on my website, fitmoneycpa.com, get on my calendar, and we can certainly walk through some steps that may be able to help lower your tax liability. Have a great day. Have a great week.